your views now are surprisingly optimistic, if I dare say, on the economy. Tell me why.
Yeah, it's surprisingly optimistic and surprising to me that I'm as optimistic as I am. And the big reason is largely that, for whatever reason, the economy has been able to withstand these higher rates, has actually reaccelerated, and inflation, of course, has performed or rolled over, if you will, more aggressively or more assertively than the Fed thought or the markets thought. And so the big difference this year compared to last year is the Fed actually has ammo to provide some help to the economy, even if they need to. And right at the moment, they don't need to provide any help at all because, of course, oddly enough, economic growth has accelerated, not decelerated, but accelerated.
Okay, so here is maybe our first contrarian take of the day, which is that you don't think the Fed is going to cut in March or May or indeed anytime soon. Is that
Well,
correct?
I see that they certainly have room to begin to
Uh-huh.
ease at some point, but it's really going to depend upon how the first quarter or two, economic growth plays out. To the extent that it's still at trend, we're still growing it on a year-over-year basis, on a nominal basis at 5.8%. So we're still above trend nominal growth. Real growth, of course, year over year, 2023. These growth rates are always a little quirky, all right? When you hear that the economy grew 2.5% last year, that's the number that you hear the most. That number means that for the full 4 quarters of 2023, economic activity was, say, we'll call it $29 trillion. That would have been 2.5% bigger than the year before. So it's a 4 quarter over 4 quarter number. But when you look at the fourth quarter over fourth quarter, you're looking at a 3.1% growth rate. So that's the acceleration I'm talking about, kind of hidden within the macro numbers, that we actually have, kind of an improving economy right at the
Hmm.
margin.